So the US elections have come and gone, and the Republicans have really swept the state with the red brush, and they're giving Donald Trump a second run at the Oval Office. Now everyone is asking, what can we look forward to? What's going to be the impact? And for this discussion, we're looking at the impact on Africa. And for it, I am joined by ETM Analytics' co-head for Africa, Takutwa Ndowuna. Excuse me. Thank you, Tux, for joining me on this discussion. So, I've got this rule of thumb that you do not trust a politician on the campaign trail. And we know that Trump is the man talks big. Like he proposed 60% tariffs on China and across the board tariffs, and he's suggested massive tax breaks and all these policy decisions that's got some experts really concerned that his term in office could lead to a second bout or at least a renewed inflationary pressures across the globe. Now, this has a knock-on effect for African states that is problematic.
Yeah, definitely, Ilse. Thanks for having me. I think if Trump's policies are inflationary, interest rates are said to remain elevated, which could then exacerbate an ongoing funding squeeze on the African continent. As you're aware, since 2022, several African countries have been locked out of international capital markets, and that was due to higher interest rates. And while there are several countries that have returned to issue Eurobonds this year, it's only been a handful, and it's only because of necessity and not want. And it's problematic if interest rates are said to remain elevated given the upcoming redemptions in sub-Saharan Africa. They're set to rise to 6 billion this next year from 5 billion this year. And there you could see several countries be forced to enter the international capital markets despite the elevated borrowing costs. You look at countries like Angola, they have a Eurobond to the tune of 864 million that they need to repay next year. South Africa also has a 2 billion redemption that they may need to refinance next year. So yeah, these countries will be forced to enter the international capital markets despite it being expensive.
And there's also the impact. We've been following it, post the outcome of the US elections. The US dollar has just been popping champagne. It's been running, and it's been, call it what you want. Call it the markets, just correcting itself following now that the uncertainty around the election is out. Trump trades, US exceptionalism, make America great again. Call it what you want. The US dollar is having a field day at the moment. Now, there are some questions about whether or not this is sustainable, whether we will see this continue over the short to medium or even longer term under a Trump presidency. But a stronger US dollar just really adds to Africa's woes.
Definitely. If that dollar strength is sustained, it's going to cause a lot of problems. It'll raise import costs for African countries. It'll fan inflation and obviously raise debt servicing costs, which is all detrimental to growth in the long run.
And obviously, under a Trump presidency, specifically now for Africa, we remember from his first term that he was very derogatory, and I can't repeat it because just in case my mother's going to watch this, but very derogatory towards some African states. And there's been a lot of speculation or whether or not the stance will continue towards Africa. But, the landscape looks a bit different now. The US really has been caught asleep at the wheel in the sense that China and Russia has been eating away at US influence in Africa. And this is important. It's not just some willy-nilly who you align with. Africa is the basket of critical minerals for the world at the moment, especially if we look at the new tech coming out, whether it's chips, whether it is, EVs. Africa is going to play an important role with regards to critical minerals. So the US will look to, perhaps reestablish some of that influence. They can't just completely write Africa off. And this is not only true, by the way, for Africa. We're seeing the same happening in Latin America, where the US's influence is just waning. Its popularity among the nations and the people on the ground is really waning. And we see other forces starting to take advantage of that as the geopolitical tensions in the world also starting to shift a lot. So definitely a big problem, and something that the Trump administration might have to handle a little bit differently compared to his previous term.
That's definitely true, Isa. I think for us guys from the financial markets, what's interesting for us is there's been a narrowing of the spread between African sovereign debt and US treasuries. So that's essentially the risk premium. And what we're seeing is it's providing some leeway for African issuers, to enter the Eurobond market, whilst the market assesses what Trump's policies will actually entail. As we all speculating at the moment, we really don't know. And as we saw last week, South Africa took advantage of that opportunity by entering into the Eurobond market and issuing a bond. And earlier this week, we heard that Nigeria might also be looking to issue a Eurobond before the end of the year. So I see an opportunity for African sovereigns to, issue Eurobonds currently before the Oval Office in January.
Might be a smart move, right? Well, Tux, thank you very much for your time. We will actually have to wait until January to see, how much of Trump's big talk is going to realize into ground action, if we can put it that way. But Tux, thank you very much for your time, and we will chat again soon.
Thanks, Ilse. Thanks for having me.